Tonight we turn our focus to Japan, a country whose story is as complex as it is fascinating, and whose journey has captured the world's imagination for decades. This is a nation that once seemed destined to lead the world, dazzling observers with its rapid transformation and technological prowess. In the 1980s, Japan's economic miracle was legendary. Sony Walkmans, Toyota cars, Nintendo consoles, icons of global dominance that shaped pop culture and redefined entire industries. Experts predicted Japan would soon surpass the United States as the world's largest economy, and the future seemed limitless. But that future never arrived. Instead, the country faced a turning point that would change its destiny. In the early 1990s, a massive asset bubble burst, wiping out trillions in wealth and shattering national confidence almost overnight. This wasn't a typical recession. It marked the start of Japan's lost decades, a period of deep, structural stagnation that would last far longer than anyone expected. Since the mid-1990s, Japan's GDP has barely budged, leaving an entire generation in economic limbo, uncertain about their future. Worker salaries have seen almost no real growth for over 30 years, even as the rest of the world moved ahead, and opportunities for young people have become increasingly scarce. The vibrant economy of the 1980s faded into a slow, grinding reality of minimal growth and deflation, with businesses struggling to adapt. Even after a brief uptick in 2023, the economy contracted again in early 2025, dashing hopes for a sustained recovery. Japan is no longer the sprinting superstar. It's a weary marathon runner facing an endless uphill battle, with an aging population and shrinking workforce adding to the strain. The question now isn't when Japan will lead the world, but whether it can secure a stable future for its people and preserve the quality of life for coming generations. The nation's recovery remains fragile and uncertain, with each step forward shadowed by the risk of setbacks. The challenges are complex, deeply rooted, and not easily untangled, ranging from economic reform to demographic decline. Japan's long twilight continues, with no clear end in sight, as the nation searches for a new path forward. The world watches, wondering if the miracle can be rekindled, or if Japan's twilight will stretch on for another generation. Japan's greatest challenge is a demographic crisis unlike any other, one that is reshaping the very fabric of society. The country is facing a future where the balance between young and old is tipping dramatically. The population has declined for 18 straight years, with the fertility rate at just 1.15, far below replacement level. Schools are closing, and once bustling neighborhoods are growing quieter each year. Annual births have dropped below 700,000, and over a quarter of citizens are now over 65. Japan is rapidly becoming one of the world's oldest societies. The shrinking workforce must support a growing elderly population, straining pensions and healthcare. Hospitals and care facilities are under increasing pressure to meet the needs of seniors. Labor shortages are everywhere, from construction to high-tech factories. Businesses struggle to find enough workers, slowing down projects and innovation. Economic growth is fundamentally constrained by a lack of workers. Shops close, offices sit empty, and entire industries face an uncertain future. Government policies to boost birth rates and encourage workforce participation have failed to reverse the trend. Despite incentives and campaigns, the numbers continue to fall. The dependency ratio is soaring, threatening the sustainability of social security. More people rely on fewer workers, putting immense strain on public resources. The nation is literally shrinking, and with it, its economic potential. Rural towns are vanishing, and once thriving communities are fading away. Every sector feels the impact of this demographic time bomb, from local businesses to national industries. The effects ripple through every corner of society. The countdown continues, shaping Japan's present and future. Each passing year brings new urgency to find answers. The crisis is relentless, and solutions remain elusive. Japan stands at a crossroads, searching for a way forward in the face of unprecedented demographic change. For Japanese workers, the last 30 years have meant stagnant wages and mounting pressure. Even with a record 5.3% wage hike in 2025, Real wages fell due to inflation. Lifetime employment and seniority-based pay once brought stability, but now stifle flexibility and growth. Companies hesitate to raise base salaries, fearing long-term costs, which keeps consumer spending weak. More workers are in part-time or non-regular jobs, with lower pay and less security. Labor reforms are slow, and the workforce is deeply divided. Without sustained real wage growth driven by productivity, workers remain trapped in economic frustration. The wage dilemma is central to Japan's struggle for recovery. After decades of deflation, Japan now faces stubborn inflation and weak growth. Inflation hit 3.5% in May 2025, shocking a nation used to price stability. Essentials like rice have doubled in price, squeezing household budgets. Economic growth remains sluggish, just 0.7% forecast for 2024 and 1% for 2025. Consumer spending is weak, as uncertainty and rising costs make households cautious. The Bank of Japan ended negative interest rates in 2024, but now faces a dilemma: raise rates to fight inflation, or risk choking off growth. The economy is caught in a toxic mix of rising prices and stagnation. Households are saving, not spending, stalling recovery. The central bank walks a tightrope, with few good options. Japan's economic engine sputters, weighed down by persistent challenges. Japan's public debt is staggering, over 260% of GDP, the highest among developed nations. This immense figure has become a defining feature of Japan's economic landscape, raising concerns both domestically and abroad. Decades of stimulus spending and repeated government interventions have created a mountain of debt, with much of the annual budget now devoted to servicing interest payments rather than funding new initiatives or public services. This fiscal straitjacket severely limits the government's ability to invest in future growth, upgrade infrastructure, or respond effectively to economic crises and natural disasters. Most of the debt is held domestically, insulating Japan from the whims of foreign creditors, but rising interest rates threaten this delicate balance and could quickly escalate costs. Even small rate hikes mean billions more in interest, squeezing the national budget further and leaving less room for essential services. Cutting spending risks triggering a recession while borrowing more is simply unsustainable in the long run. The debt trap is tightening, with no easy escape in sight for policymakers or the public. Social security costs are ballooning as the population ages rapidly, putting even more strain on government finances. Fiscal options are shrinking, and the pressure on leaders is mounting as public anxiety grows. Japan's debt dilemma is a ticking time bomb at the heart of its economy, demanding urgent attention and bold solutions before time runs out. Japan's economy is deeply tied to global trade, making it vulnerable to external shocks. Tensions with China and the US, its top trading partners, are reshaping export strategies and supply chains. Tariffs and trade barriers have hit key sectors like automobiles, while exports to China and the US have both fallen sharply. Japan's China Plus One strategy is shifting investment to Southeast Asia and India. Energy insecurity remains a major risk as Japan imports nearly all its fossil fuels. Global instability and rising costs feed domestic inflation and uncertainty. Japan's recovery depends not just on internal reform, but on navigating these global headwinds. The external risks are as daunting as the domestic ones. For a decade, Abenomics aimed to revive Japan with monetary easing, fiscal stimulus, and reforms. Stock markets soared, but deep problems persisted. Prime Minister Kishida's new capitalism shifted focus to redistribution and higher wages, targeting inequality and future growth sectors. Some progress is visible, investment is up, and wages have risen modestly. Yet scandals and low approval ratings have limited bold reforms. Labor market rigidity and demographic decline remain unresolved. The challenge is turning corporate profits into broad-based prosperity. The policy puzzle is far from solved. Economic stagnation has reshaped daily life in Japan. Young people face job insecurity, low pay, and delayed life milestones, fueling anxiety and social withdrawal. Rural areas are hollowing out as the elderly are left behind and services disappear. Families struggle to care for aging relatives amid a shortage of caregivers. Despite hardship, resilience and community spirit endure. Small businesses and startups are finding new paths. Yet individual efforts can't fix systemic problems. The human cost of stagnation is a quiet, ongoing crisis. Millions grapple daily with uncertainty and diminished hope. Japan stands at a crossroads, facing intertwined challenges: demographic decline, labor rigidity, and crushing debt. Old policy tools have lost their power. Bold structural reforms are needed. Solutions like boosting immigration, empowering women, and investing in automation are on the table, but require difficult trade-offs. These are not just economic choices, but questions about Japan's future identity. The nation's strengths, social cohesion, education, and innovation offer hope. The real test is whether Japan can channel these strengths into lasting change. The journey will be long and difficult, demanding courage and consensus. The world watches to see if Japan can reinvent itself once more. The answer will shape not just Japan's future, but serve as a lesson for aging societies everywhere. The next chapter is unwritten, and the world awaits.